All right. Good morning. Comment allez-vous? It is 6:31 on Wall Street, about 3 hours before the open of trading. It's time to get your global macro on and uncover the best fundamental opportunities by looking at things like, well, sentiment, inflation, employment, GDP, technical trends, open trade positioning, seasonality, and more. Yeah, very cool. So we'll look at the long term, we'll look at the very, 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 very short term, the here and now, and try to line them up. Look for congruency. Is the underlying intrinsic trend up, down, or sideways? And then what is the market doing relative to that trend? Hey, YouTubers, you can try it out for $8. You get all these pretty colors, you get all these tools, but ultimately you will gain confidence because you've organized your trading and investing around logic first before you even open a chart. Yeah, makes sense. And once you get that, a little bit of confidence goes a long ways. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Ah, please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Mhm, mhm. Uh-huh, Sati wants pound dollar. You want me to review pound dollar fundamentally for you? I mean, you have access to the same tools. You just go to the pound dollar page. But anywho, okay. All right, so let's take a look. I can zoom in here. Yields coming down a little bit. That's good. Oil recovering. That's good. Maybe that now is time to buy a dip kind of thing. Okay, that's good. Uh, Gold still coming down a bit. S&P 500. Okay, that's good. We were about 5,000 and now we're back toward 51, but you want to look for those higher time frame moving averages. It's up on Tesla mostly, but Monday was pre that and that was an up day as well. Meta today obviously could provide some volatility. 107, huh? Okay, that's interesting. 107. And then Bitcoin, yeah, okay, yeah, interesting. USDs are very, very bullish still. USD CAD very bullish. German stock market bullish. USD Swiss franc bullish. Now Aussie Kiwi's neutral. Okay, Kiwi dollar very bearish. Kiwi Swissy very bearish. Euro dollar bearish. Aussie dollar bearish. Pound dollar bearish. So dollar is still looking like, based on the eco data, the economic data, still dollar strong, even though we haven't had that for the last day or something. Okay, that's the difference between long term and short term. And we do have a mixed bag here. This so far this week, it's bullish, not very. Okay, not very, but somewhat. And then monthly, it's still off. So risk on, risk off. Be careful. And by bearish, I meant dollar. Okay. Interesting. So mixed bag for sheer. Be careful. Underlying direction. So this is the here and now in the market. Big rally in the Japanese stock market. Big rally in small stocks in the U.S. Our mixed portfolio. Okay, strong. Our Dow, which is large institutional, is strong. Okay, Nasdaq, which is our growth. Okay, strong. German stock market strong. In fact, if you just look at stock indices, yields are down and stocks are up. Yeah, that's good, huh? Looking at, oh, well, you know what? Let's look at a couple other things. Sorry, I'm too quick. Too quick. Look at the majors here. You'll see dollar currently is weak against Aussie. So that makes dollar strong because Aussie dollar strong because pound dollar's down, US dollar strength, euro dollar down, US dollar strength, USD Swiss franc up, US dollar strength, USD CAD up, US dollar strength, USD yen up, US dollar strength. But Aussie, so US dollar is strong, Australian dollar is even stronger. So that could be a day trading. You could be focused on Aussie dollar today. You bring up the miners. Aussie Swissy up, Aussie CAD up, Aussie yen up, Aussie Kiwi up. You see the theme? Pound Aussie down, Euro Aussie down. Aussie is strong. So maybe you trade Aussie today, huh? Now, Sati wanted to know a little bit about pound dollar. Well, it's down today, and it's expected to be. Okay, Sati, you see, it's got a score of -8, and it's down today. Now, not a lot. It's not down a lot. These markets are not down a lot, but it's bearish. It's expected to be bearish, and therefore that's why it's in the bottom right-hand corner. The outlier is the Aussie. This was interesting. Pound dollar is not interesting. Swissy is weak. You see that in risk on. Yen is weak. You see that in risk on. Okay. Copper bullish again. Remember, it's got a score of 7. It's expected to be bullish. These assets are expected to be up. Oil has a score of 4. Gold has a score of 2. Okay. And they're down. So these might be buy dip scenarios. Okay. Hong Kong is listing some, I don't know, what do you say, cash Bitcoin and cash Ethereum ETFs on the Hong Kong Stock Exchange. That could get interesting for crypto. Okay, not a lot on the economic calendar today. Tomorrow, busy day. GDP being huge, pending home sales also very important. Then the Bank of Japan and their outlook. Okay, what is and what's likely to be. So that'll be very interesting today. It doesn't have a particular time. The Bank of Japan just releases it whenever they say fit. And then PCE on Friday. But meanwhile, so like today we have Meta, that matters. And then I think we have Google. And then somewhere out there, I think Friday is Nvidia. Somewhere in there is Amazon, I think. Yeah. Busy week, even though this isn't really so Meta today. Pretty amazing. Did you see what their expected daily users are analysts expect them to report today? 2.11 billion people log in every day to Facebook. It's unbelievable. Yeah, it's but oddly I'm not one of them. Never have yeah. Interesting. Yeah. I guess I should. It's not like I'm just a fuddy-duddy old man. I don't like it. That's my problem. Little things like managing my account is ridiculously complicated. Forget it, stupid ass, but whatever. Um, yeah. So whatever. Oh, Rick, you got a question? Your mic's on anyway, so just a hot mic, I guess. All right. So there you go. Yeah, that's all right. I turned your mic off for you. I got you, bro. I got you. What do we want to look? I mean, you could start looking at things like well, we have a Bank of Japan meeting, right? So we can go BOJ and say, okay, where you look at the current economy in Japan, and of course you can pull that up on QuantBox very easily. And you say, hey, where are we in actual inflation? Because this is inflation expectations by the Bank of Japan. So by the time we're in Q2 of 2024, okay, Bank of Japan thought we'd be at, or they'd be at about 2.75% inflation. So then you can go pull up the information, see how are they actually doing. And then 2.75, they thought if they had 2.75, that interest rates would be, well, somewhere between, it's an average, right? Somewhere between 0 and 0.25. But notice that somewhere in here are rate hikes. It's odd, right? But I don't know, correct me if I'm wrong. The street doesn't expect rate hikes. Am I right or am I wrong on that? The problem is I don't listen to anybody, so that's my problem. Um, but I think they think we're just going to be at 0 for a long time. But if I'm wrong, but this is what the Bank of Japan is telling us. So additional rate hikes coming unless inflation is different from these levels. Yeah. Denise says, yeah, you're right. Yeah. Well, yeah. So interesting, huh? And quite steeply raising interest rates as much as 0.75, let's say. Not quite. I guess one and a half. Sometimes they do this like mid, so yeah, the actual number, let me say it that way. 0.77. So let's call it 0.75 by the end of next year. Isn't it nice to be able to look into the future? Yeah, cool. And so this gives us the shape of the curve will look like this. Okay. Negative, 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 flat, 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 positive with a trajectory. Oh. Yeah. So there's some potential bullishness over the next year and a half. Yet there's bearishness in the market, right? Interesting, right? Yeah. Interesting. It's nice to have the data. Remember, we get this data from the Bank of Japan. Okay. Sati wanted me to cover pound dollar. Okay. I'm not sure what you want me to look at because you have the exact same tool as me. So I go to, like, if you want to do a price forecast, if you're doing some sort of technical analysis, well, there you go. It's bearish. Right, Sati? It's bearish. How do I know? We added up the score, right? Oh, you're probably in the wrong webinar for that. I mean, I might, but we're looking at fundamental trends is what we're trying to undercover. Statistically, Seti, this is bearish. If you analyze it with basic, straightforward statistical analysis of the price time data since April 5th, this has a negative slope. It is bearish statistically. And then we have a worst case, base case, and best case scenario, right? So that's that with the projection, linear projection out down to 22 or 23. Okay, not an opinion. That's what's happening right now. Now, the bearish part has to do with quantitative analysis. So you said pound dollar. Okay, well, let's pull this up. Okay, seasonally, not great. Not great. That favors pound. But here's the statistical trend. So that's down. We compare the fundamentals of GDP with the United States. GDP in the United States is 3.4. GDP in UK is negative 0.3. Okay, look. Okay, that favors the US dollar, huh? Inflation in the United States versus inflation in the UK. Unemployment US at 3.8, in the UK 4.25. Okay, that means the US economy is slightly stronger. Okay, interest rates in the United States 5.5, interest rates in the UK 5.25. Okay, that actually favors the UK. It's better for the economy to have lower interest rates, right? So we look at the differential. Now, when we look at the commitment of traders report, dollar is 50-50 by institutional investors. Pound is basically 50-50. So not a big difference there, but you have to score it. And so that gets the US is winning that. In retail is 60% long pound dollar and 40% short. Okay. So, okay. Now, because it's over 60%, and because this is below 40, it just crosses the line here, -1. So if they're long pound dollar, why does QuantBox give it a negative reading? Because when you cross the 60-40 split, you trade against retail. Okay. So that's that. So you could look at this setting and say, well, you're bearish. Maybe you agree with these scores, maybe you don't, but you may get to the similar conclusion. You're a bear. That's all that matters. Then you even look at this statistically. So, really, when you're analyzing what we call trend, but it's really just statistical analysis of price time data with a linear projection. So, you're projected to have a lower high, lower low of some sort. Cool. Seems reasonable. This is a daily chart. So most likely today, somewhere around 124 and a half and 125 and a half, you will look for rollover, technically. And then you'd say, well, that's likely to occur at some form of resistance. Maybe here, maybe here. And now you go to your chart and go see if that's true. Are there any pivots there? Or is there any other levels of resistance? Does the chart look like you want to be bearish? I would start on a high time frame like this daily says down, but your 15 minutes chart says up. Well, that's what you want, because it might be up for an hour and down for 2 days, or it might be up for 5 hours and down for 5 days. Cool. Open up your chart and go find it. But that's not QuantBox doesn't go the next step. It doesn't say, let me go find you a trade. No, that's your job, right? but it says, look, there's lots of logical reason to be a bear on this pair. So, but it doesn't mean it's going to fall. Okay. You have to do that next step. Yeah. Now, if you want, I think the next step now is to have artificial intelligence watch the pound dollar for you, looking for bearish trade plans. Have you signed up for TRADARS as well, Sati? Yeah. So I guess I could do that quickly. I don't really want to make this a TRADARS thing. But let me just show you, since you're asking right out of the gate, even before I start recording. So let me do that out of respect. Let's see if I'm in the right browser and everything. So I open it up. Oh my God, it's the same colors as QuantBox. Yeah. Well, one is dark, right? One is freedom, the other is enterprise. So the way you do that, Sati, is you log into your radars. And so now QuantBox has helped you to decide you want to be a bear today on pound. But it doesn't mean that it's going to fall today. You're just a bear. So what you do is you go here and you turn everything off you're not interested in. Oops, I'm turning everything on. Okay. And you're only interested in pound dollar today, right? Where do you want to sell pound across the board? Just look for, okay, whatever. Let's just do this. So you hit save. Where did it go? There's nothing. I guess there's nothing. Let me double check. Yeah, it just doesn't have any trade plans right now because they don't exist. So anyway, so now here's what's happened. You had a morning meeting with your quant, and the quant says, well, if you look at GDP and if you look at the PMIs, okay, and if you look at retail sales, everything favors of sell pound dollar, sell pound dollar, sell pound dollar. So you're like, hey boss, this is your quant talking to you. Hey boss, I looked at retail sales in the UK, PMI in the United States or in the UK, GDP in the UK, compared that to the same numbers in the United States. And, fundamentally, I think, that it favors pound dollar short. Great. So you finish your morning meeting with your quant. Then you have your morning meeting with your technical analyst, and you're like, hey, I want you to watch pound dollar and show me all the technical trade plans that pound dollar produces. Okay, so later in the morning, you meet with the technical analyst again, and they're like, there's nothing, there's no opportunity, long or short. What do you think? It's good, right? Do nothing, keep your powder dry. Now, traders being AI will never make a mistake. So if it sees patterns that are bullish, it'll tell you. But now you can make mistakes. You can make mistakes. You have to say, oh, that's right, I'm a bear. So you ignore all the bullish trade plans. Okay. Now, Boris says, Boris scalped pound dollar down this morning, right? And you made about 15 pips. Sweet. I guess that's what is meant by no trades on traders. No, well, I don't know if you're poking fun at traders. Traders doesn't see a discernible pattern. It's not making trade decisions for you. There's either one of like 12 or 13 patterns or there isn't. And it's looking at multiple time frames. There's That's it. There's just no patterns. But you can have volatility. You can have a move. You can kick off of a moving average, but it doesn't necessarily make it a pattern. A pattern would need multiple touches, for example. So that, Boris, if it continues, could produce a pattern later. but it's not happening now, or I just need to refresh my page and it just it didn't load properly. No, it doesn't exist. Okay, doesn't mean it won't move. Doesn't mean it won't move up or down. It's just there's no pattern. So if you want a reliable, predictable pattern that we have statistics on, well, that doesn't exist right now, right? But it's tradable. You can scalp it, right? Yeah. So remember, it's just doing patterns. It's not predicting the future. The same thing like QuantBox doesn't predict anything. It it right? Like for example, you want to know, Sati wants to know about pound versus dollar. Well, look right here. Let's compare GDP. GDP in the United States was 3.2, now it's 3.4. It's improving. In the UK, it's nasty. Okay? And then gathers the PMI. Okay? Okay, 50.3 versus 48.7. So look, dollar wins again. Retail sales, 0.7 in the United States, 0 in the UK. Okay, look, boom, favors. And now you have a very logical way to say, well, maybe I want to be a bear on this. It's helpful. Boo. All right, lots of little bugs going on. All right, happens. Okay. Non-farm payrolls, well, only the United States of NFP, but we went from 270 to 303. That typically is good for the US economy, and that would typically weaken the US dollar, and that would typically push pound dollar up. Is it okay? Let's take a look. Employment in the UK. Okay, they're losing jobs. Okay, that's not good for the pound. Remember, pound dollar. Okay. Now, remember in the logic, it has to understand good numbers are typically weak for the US dollar. Maybe not in all cases, but typically that means the economy is really good. And when the United States has a good economy, the dollar weakens because of an increase of trade and all kinds of stuff, right? May not necessarily be the case, but you have to have sort of the usual built into the model. So, anyway, so it knows that a good number is bad for the US dollar, so to speak. But anyways, unemployment rate in the United States 3.8. Okay, that should strengthen the dollar. We don't want that. We actually want a little higher unemployment. So, anyways, that brings the pound dollar down. Unemployment in the UK. Okay, right. This brings the pound dollar down. Okay. Okay. So, anyways, you see how it's just helps to pull all this data in? It's kind of nice. And you have it for everything, right? Oh, yeah, but what about CAD versus Switzerland? Okay. Do you have that? Yeah. Okay. So Canada and Switzerland they don't have non-farm payrolls. You get it? That's why it does that. But look, down. That's all. No, not necessarily down in the market, just comparative. Switzerland wins. Switzerland is better off. You see? That's all. Why is Switzerland better off? Okay. Their unemployment rate is 2.4. What? Unemployment in Canada, 6.1. What? Okay. There's a difference. That's all, right? Cool, 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 cool beans. So, anyways, you can play with these tools. Let's go back. What do we want to cover today? I mean, a little bit of seasonality, maybe, right? Let's do this. I guess this would be fun. Let's go to what do you want? Nasdaq or S&P 500? Do I have NASI on here? Yeah, I do. Okay, Nasdaq. What's going to create the most volatility in Nasdaq this week? Let's see if it loads. While that loads, I want to get some additional data. Loading, loading, loading. Oh, well, I'll try again. It's struggling. It's a lot of data. Let's do it again. Give me some NASI. Okay, there's NASDAQ. Okay. So what do you think is going to create the most volatility in NASDAQ this week? Weekly jobless claims, GDP, PCE. Nobody knows? Nobody even has a guess? All right. Well, how about earnings? So this week is week 17. Okay. And when you look at the NASDAQ, we know, let's say roughly between week 15 and week 20, okay, earnings are a big deal. Now, every second quarter, it's roughly the same. Okay. And right. And this is what it looks like over the next couple of weeks. So we actually peak out typically week 14. Okay. There's still bullishness, but less bullishness as time goes by. And this could lead a peak in NASDAQ, you know, buying, let's say, till the end of the month. So more and more earnings come out. So it looks like if I can go back, if I can reset this, where's the reset button? Can I reset this? No. I want to have to reload the whole thing. Can I reset this without reloading the whole damn thing? Did that do it? No. Oh yeah. There should be a reset button here. Interesting. Can I? There we go. Let's do it that way. So what we want to see is like down here in week 11, week 12, week 13. These are buying weeks, right? You see that? And then we get the rally, and now we're in this zone here where we've peaked out. So, right? And it moves sideways for a month until we get through earnings, and then we start accumulating positions again. Okay. So that's kind of the shape of where we are. This is the shape of the year for NASDAQ. And you can see week 12, as I pointed out here, week 12 is a predictable week for buying. It's 2 standard deviations below the mean. And if you're a bull, typically that's a good time to buy on historical averages. These are historical averages. But notice it started in week 8, 2 standard deviations above the average week over week relative change. And now the flow of capital could be from here to here, and then we peak out week 18. Okay. So we're getting close. Next week could be a huge week followed by pullback. Buying really dies off for about a month. It peaks next week. The change from this week to next week. So it's really kind of showing you, so week over week. So let's call this really week 18. I think this is closer to a week 18 because because this is an average, right? So some years it's earlier, some years it's later. So let's imagine on average, maybe because of a leap year or something, right? That we're really in week 18, not week 17. And why can we guess that? Well, Tesla, Meta, Nvidia, Amazon, Microsoft, who else? Google. I think they're all reporting, right? So that's the week we get the most volatility, and then it all fizzles out quite quickly. Doesn't mean it won't go up. We do know it'll go up, but it goes up quite slowly for a month. Okay, so this is an accumulation week, followed by a slight higher high, followed by flat, followed by flat, or like slight up and then a slight down. So on average, we go a month with nothing really happening. Then a couple more weeks of up and then down, 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 down for a while. And you see all of this. Okay, slight accumulation, but really not much. Okay. What was it next week? Thank you, Boris. Um, but you see, like QuantBox is helping you know when to accumulate. Okay. And it's this zone is the accumulation. Okay. Buying the dip. And look how predictable it is. We have it week by week. Okay. Week 8. So 4 weeks, 8 weeks. Yeah. Okay. Market comes down. And now we hit 2 standard deviations below the mean. By week 8 or by week 12, you can start buying again. Okay. And by this week this is really the payoff week. And you could just either hold and stop buying or take profit and then buy a little bit later. But notice they're not really dips. It's a dip in buying, but it's not a dip in accumulation. Okay. It could be a little bit of profit taking here, a little bit of profit taking here. But the next good buying opportunity is week 40. So peaking out soon and drifting at sea all summer. It was in my annual outlook, by the way, for the year. But this can go up till June and then fizzle out. But notice it'll be up, sideways, up, sideways, fizzle out. But another interesting thing, isn't it? That basically this week is the most volatile week of the year statistically. Okay. What do you think about that? Knowing the week over week volatility, basically flows of capital and the direction of the flows of capital. And then I added this myself, by the way. I'm not a developer dude, but I am an economist, so I know what I want. And I was able to figure out how to do the development work to add the two standard deviations. So, right, either stop buying or take some profit, start buying more. Okay. Stop buying or take some profit and start accumulating more. Okay. At the very least, you're right. Now, we just had a down period in the stock market, didn't we? And QuantBox could tell you, like, okay, well, and maybe it didn't happen in week 12. Oops, let me go back. Maybe our dip happened in week 16, right? But we had a sharp rebound, and wouldn't that's what the standard deviation is telling you. This is way outside the norm. The market is way too bearish on NASDAQ, according to statistical averages. And it popped right back. Now, what's different this year than the seasonality? Remember, seasonality is just an aggregate of data over time and then figuring out averages. Well, this year could be different than right. But the idea is, oh yeah, that was nice. Um, this year's different because the election. This year's different because the Fed. Okay, okay, but at least and you make those decisions, right? Okay. I traditionally stop accumulation by July 1st. I've historically done that. As long as I can remember, I stopped buying in July. Actually July 1st. So like June to July is an active month, but by July 1st, I'm done. I don't accumulate anymore. Looking at the historical norms, this is saying, well, the peak is closer to August, but I'm like, well, I don't care because I'm not buying. But I could maybe accumulate a little bit more. But you know what? I'm on the beach, baby. And now you can do some comparative analysis and check out maybe some other assets like, well, what about Dow? Is there a better time to buy Dow? Is there a better time to buy S&P 500? Is there a better a better time to accumulate your investments in the UK? We could look at volatility in the market, okay? And once again, this is measuring completely different asset class. NASDAQ said the 12th week, VIX says the 13th week. Interesting. Okay. So volatility increasing, volatility decreasing, volatility increasing. When you read this chart, what does it tell you about its relationship with the stock market? Think about it. I just told you what I tend to do and not do on based on the calendar. Okay. Right? So it tells you buying and selling. Mm, 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 mm. And there's a relationship with volatility. Okay. I think that's good. I think that was good. Anything else I need to look at? Um, Retail still very heavily long Ethereum and Bitcoin. And again, there might be a market mover coming up based on the new Hong Kong listings that are happening very soon, maybe this week, maybe next week. Still quite a bit of bid for well, platinum and gold and silver. Those are precious metals, and then copper is an industrial metal. But right now, anything other than money. Okay, think about that. Anything other than money. Because if inflation is persistent, that means every single day you wake up in the morning and your money buys less copper. So you might as well just own copper because a a ton of copper is a ton of copper. I have a friend. Oh my gosh, 6 years ago or something, he bought because he owns a manufacturing company. He was manufacturing something out of aluminum. Maybe it was aluminum, some industrial metal. I don't think it was stainless steel. I think it was aluminum. For some reason, he was making things out of aluminum, and the cost of aluminum was going up. And so he found out, well, first of all, if he buys it now and the price keeps going up, he bought it at the lower price, but he has to buy it at the higher price now, right? So and then because he bought bulk, he wasn't buying like through a middleman that chopped it up into smaller pieces. Once again, he would save money. So he ended up buying like oh, I don't know, like $1 million worth of aluminum that was sitting in one of his warehouses, and the price tanked. Oh my god! And he's got all this aluminum sitting there, like just a block of aluminum or a roll, probably a roll. I don't know how it comes. Um, but just sitting there, and for about 3 or 4 months, he was sweating bullets. And then, of course, it went back up. Yeah, well, I say, well, take comfort that it's still an asset on your balance sheet. The downside is your balance sheet is worth less, but at least it's there. Um, yeah. So, anywho, and I think the next thing that happened was COVID. I think maybe that's what it was. He bought it, prices were high, then COVID hit, and the economy collapsed. Demand for manufacturing collapsed, and he's sitting there with $1 million worth of aluminum that he can't eat, can't pay employees with, can't pay his rent with it. Yeah. Anywho, it's hard to be a manufacturer. You know what I like? I like Forex. I like the stock market. I like trading commodity futures. I mean, really, think about it. Um, it's relentless and unbelievably exhausting to like run a restaurant or manage a farm. It's both things are 24 hours a day, 7 days a week. You give up holidays, you give up weekends. You're up at 5 o'clock in the morning waiting for lettuce to be delivered, and then you're there at 10:30 at night trying to balance your books and do all that and get the schedule ready. And you need a new cook or you need a new dishwasher or all this stuff. It's never ever ending. Nobody ever gives you a trophy at the end of the year. You don't get on the cover of a magazine because you're a hardworking farmer. And think about a farmer. You have to be a hardworking. You have to be a mechanic. You have to be a chemical engineer. You have to understand nature. You have to understand the futures market to hedge all your risk. You have to be an expert in insurance and all this stuff. Like it's got to be one of the most difficult jobs in the world. I just sit in my desk all day and bitch and complain about that. Oh, oh, my lower back. I've been sitting here so long doing nothing, watching YouTube videos while I wait for trade setups, right? And now I'm at the point where I've seen every video on YouTube. Seen this one. Yep, seen this one. Skip, right? Um, because I have to set things up fundamentally and then wait technically. I spend 90% of my job waiting. Oh, and it's so difficult. But, you know, I can get on TV. They'll write about how wonderful what you and I do, how wonderful and amazing it is. And I'm like, yeah, 90% of the time, nothing's happening. Kind of like sitting in a forest, up in a chair, in a tree, waiting for deer to walk by. What did you do all day? I sat in a tree. Did you shoot anything? No. Hey, so what do you call yourself? I'm a deer hunter. Well, where's your deer? I ain't got no deer. Yeah. I got everything though. I got the camel outfit, I got the little collar, I got, doe urine on my shoes, it's great. I got the hand warmers, I got the crossbow, it was only $3,000 for the bow, and you're like, I'm all set up. I got the outfit, I got the matching truck, right? I got everything. You're like, do you have a deer? No. Yeah, still hunting. What are you going to do tomorrow? I think I'll sit in next to a swamp in the weeds with my ghillie suit on and my shotgun. I'm going to wait for the ducks. Yeah. Oh, one just went by. Really? Oh, you missed it. Good day. Good day hunting. So look, we're hunters. Now, if you're a chaser, you're running around chasing deer, you're going to starve. Okay. So what we do is we increase our odds by knowing where our targets are likely to be in the future. And then we set up ambushes. So like Sati, I think wants to sell pound dollar. I'm not going to spend much time on the chart because that's Sati's job. Or uses QuantBox to watch it, right? I mean, TRADARS to watch it. Either way, now you got to watch this. So pound dollar was the one, right? Of course, I pull up something without a pound dollar. Nice. Do this one. It's got to be a pound dollar here, right? Yeah. Okay. So now Sati's job, assuming Sati wants to sell pound dollar, is to figure out where the deer is going to be between today and tomorrow. Where are you going to set up your blind, whatever you call it? Which tree? How high? Okay. Where are they going to go? Well, I've seen them here before. And then, so you have history. So you're like, right. Um, you're looking at where they're rubbing their antlers on the sides of the tree. And you're like, okay, there's definitely activity here. Oh, you're walking through the forest and there's droppings, right? So you're like, okay, I see activity. Deer definitely hang out around here. I have a water source. I have a clearing. I have a something. Okay, great. So I'm going to set up my blind right here. Is it going to work? How do I know? I don't know anything. What did I have a conference meeting with the deer last night? So, boys, where are you going? Okay. What's your plan tomorrow morning? They don't tend to talk much. Although I've been yelled at by deer. I have so many deer on my property that I almost ran one over like last week. Pinned it against my mailbox. I mean, seriously, I have floodlights on the back of my Porsche, so when I back up, there's floodlights because I might hit an animal. And in this case, I'm right on the driveway, right behind my truck. I see the whole thing, and its eyes are staring at me. And of course, it's not going to move, right? Right. So, anyways, so I see them all the time. So now what? Okay. Now I have my setup. I don't know where they're going to be in the future, but I know where I'm going to set up. I've made the decision. I've looked, okay? I've looked. So somewhere like there I'm interested. Okay? Good. Okay? Now I might have missed it. Maybe they came around the area, but I don't have a clear shot. They're too far away. If I'm shooting with a bow, an arrow or a bolt as it's flying through the air could hit one branch and go ching. Okay. Thunder chickens. Oh my God. We had a turkey run past my house when I lived on my other property. There was a big clearing there where I built a golf course. Um, and my son sees this turkey. He's got to be, I don't know, 5 or 6, 7 years old. I don't know. I don't like kids, so I don't know the age. But anyways, young. He was young, and we just had Thanksgiving, and we see this turkey, and he's like, he's gonna go kill it. So he's got like pots and pans. Oh, he wasn't gonna kill it. He was chasing it away. He so he was out in the forest with pots and pans, yelling at it too. Boo, 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 go away. Boom, 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 boom. Which is, I'll never forget that. It was just so funny with pots and pans. And the turkey's like, "Boo," right? Anyways, pretty funny. So I look, I don't know if the deer got spooked. I don't know if the deer are just not going to walk up here today. I don't know what they're going to do. They can do anything. There's free will. I don't, in this case, we're talking about buyers and sellers of pound dollar. I don't know what the news is going to be. I don't know what the flow is going to be. I have all these analytical tools on QuantBox. Yeah. And it does say, look, you're probably better off focusing on a plan in that direction. Okay, cool. Well, it's on the higher time frames. This seems like a pretty reasonable place. So I set my blind up there, and you have to be comfortable with the fact you might not get a shot. Even if you see the deer, you don't have the pattern. Now it's tradable, right? And I'll pick on Boris because Boris earlier said, well, Tradars that doesn't have a short or right, but he shorted and made money. Good. Like that'll always happen, right? Like you can do this, that's fine. But if you've planned this, you also have to be okay where you don't get the trade that you planned. Oh, I see. Okay, Boris. But okay, but you still help. This is why I like commentary. So don't I did, it wasn't a slap or anything, Boris. Okay, you're saying it didn't produce, but to some, Boris, 15 pips is a scalp, right? And QuantBox actually does that. So those that have the super, super, super upgraded version, and I keep saying QuantBox of TRADARS. So you get the plus version of TRADARS, and there's even an upgrade to the plus version that only those guys are offered, and it's where it looks for correlated trades, and pretty neat stuff. It's really good. So it looks at trade setups where TRADARS has multiple time frame setups or multiple pattern setups. So the same asset class has three things that say sell. Okay, those guys are alerted to, but very often they're only they're a minimum of 20 pips. So to me, 20 pips is like a scalp. I wouldn't get out of bed for 20 pips. But if you're sitting there, 20 pips is 20 pips. But very often that leads to something longer, right? And so you're saying, okay, you looked, you took a trade, it didn't produce much, you made a small profit, but in traders, like there's no pattern, which is good. Like, and so I'm just following up, like, just because it falls doesn't mean you should be on it. What I'm trying to say, Boris, and again, thank you for the comment because it helps me say the thing I want to say. If you haven't planned it, it doesn't exist. So if you see moves like it fell, if you can't predict it, then it doesn't exist. And if you didn't predict it, but then you trade this because it takes off, you're doing yourself a disservice. Now you're training yourself to trade after the fact late and on things you don't even understand. But you're like, so why did you sell pound dollar? I don't know. It started falling. Really? That's not the type of trader you want to be. It's more like, why did you sell the pound dollar? Well, I looked at QuantBox. I did comparative analysis of macroeconomic data, for long term, for a long term bias, fundamental bias. Then I did my technical analysis, and in something that is statistically a bearish trend, I sold a pullback high at resistance when it rolled over. That's what I want for you. That's how you use these tools. Now, the cool thing, and we talked about traders again, the other way of doing this, okay, like I prefer to do it this way where, I analyze this chart and I say, um, I sell high at resistance, and maybe it's even lower. Like this R1's okay, but this M, okay. So this is me analyzing, saying like there'll be at least one more up and then probably a down. So I want to be ready for that. That's one way. But remember, now I'm limited because I'm a human. I'm basically looking for one pattern. And I become biased on that. Why? Well, I have sort of historic bias where I just know what I like to trade. I know what works for me. I know the setups that have produced. So I could see kick it off to 21. We have another update, but then we hit this and we get some profit taking. And then I can probably sell in here and look for a change in direction and maybe kick it off, next week or next month's pivots. This is how the Wayne do. But I only know my 20 years of history, and it's full of bias. Oh, I don't like the pound. Like, I used to have a coach. He used to say, I don't trade the Canadian dollar. Why? He called it yo yo. I'm like, what? You don't trade the Canadian dollar? No, it's a yo yo. Like, what are you talking about? Oh, it's up and down. I make money, lose money, make money, lose money. I don't trade it. It's not tradable. I'm like, no, you suck at trading CAD. Don't blame the Canadian dollar, but improve. Use that as an opportunity. Like, how could you not trade one major currency because it's bad? It's not bad. Okay. But you see how like biases form. If you kept losing money trading the Canadian dollar, well, then it must be the Canadian dollar's fault, right? Um, so what could we use that does perfect technical analysis every time that never makes a mistake and it has no bias? It simply looks for bullish patterns and bearish patterns on multiple time frames. Well, that's what traders does. So now I can expand this and I can say, really, this whole zone, I can expand my zone because basically I can combine my plan A and my plan B. I'm like, okay, if it did roll over here, I get it. There's resistance here. I get it. It's R1. I don't really care about R1 that much. Okay, but see, again, these are all my biases. A machine doesn't give a two hoots about that. And then the other thing is, okay, the combination of monthly and weekly for me. Okay, if I was looking for a sell on this pair, yeah, I'd consider that up there for sure. In fact, that's preferred because of my experience. Well, sometimes my experience isn't even accurate. Again, when I studied law in the 90s, I took many law classes, administration of justice classes. I was actually accepted at the DA's office for an internship. Like, there was a time I was going to be a lawyer too, an astronaut, a lawyer, right? And then I turned out to be a male model. Hey, it was the best opportunity. So anyways, I have all these biases. But if somewhere around here or somewhere around here or anywhere in between, you have a technical analyst with no bias. Okay. Now, Boris says, yeah, if you simply follow what Tradar says, you'll lose quite a amount. Yeah, of course. It's technical analysis, right? And it produced 70% returns. I would, it would make me a billionaire, right? It's the holy grail everyone's been looking for. It's just going to make me money 24 hours a day, 5 days a week. And my YouTube videos will be changed on to over to like my Lamborghini collection, right? Right? Rick's saying it too, right? Like, and this is why I'm very careful. And remember, I'm building the culture of this organization. And now we're talking about traders again. I don't know how to get over there. But anyways, it's I have all these notes. I have a leather bound book full of notes that I'm writing, and I'm building the process. I'm building the tools. I'm building the language. With your help, I'm building a culture of this it's not an alert service. I hate alert services. I have, right? I don't do things like TRADARS because people use it as an alert service, and I hate that idea. So I have to build a whole culture and all the language and everything around this idea that it's not. Okay. Now, going back to using QuantBox, because again, QuantBox is just doing quantitative analysis. It doesn't have an emotion, it doesn't have a bias. So if I get QuantBox tells me pound dollar short, I could take that at its word. Now, I'm an economist, so I built all these things to have logic. But quoting Tommy Boy, Tommy said, you can get a good look at a T-bone by shoving your head up a steer's ass, but I'll take the butcher's word for it. I'm so glad I got that right. It's so funny. All right. So, anyways, QuantBox is like, dude, I got 9 reasons why you should sell pound dollar. Okay. That looks like a good T-bone to me. Okay. And then you go TRADARS and you sit here and you wait. And then suddenly, somewhere, right? Somewhere in this zone, TRADARS is saying, oh, there are confirmed bearish patterns developing. Okay, bearish patterns developing or bearish patterns confirmed, because you'll get both depending on your membership level. Game on. You have perfect fundamentals and perfect technicals, but you'll have to wait and do the job. But the thing is, you're going to learn through that. Like if you know how to trade and you've done all the training courses, and I assume you have, then you'll learn amazing fundamentals from QuantBox, and you'll learn amazing technicals, and you'll use them as amazing tools, and hopefully you have an amazing improvement. Okay. And like I'm assuming let's say your win ratio, if you're truly patient and disciplined, and you set things up like this over, let's say 200-300 trades over time, I'm sure your win rate will go up 30%. I can't imagine how it wouldn't if you've developed patience and discipline, solid fundamentals and solid technicals. If that doesn't help you improve your win rate by 30%, then I don't know if this is a gig for you, right? This much solid data. Yeah. There's got to be a minimum of that, right? Yeah. So, anyways, super cool. But you're right. If you just turned your brain off and traded every pattern that TRADARS does, sorry, I don't know if it's going to work. And also remember, radars are they're emerging patterns. Many of those patterns don't fulfill. There's 2 parts of TRADARS. There's ones that are emerging, they're radars, and then there's an active tab where these are the ones that are in play. They've actually worked, and now you have management to do. So many of the emerging forming patterns fail. That's why you just blindly traded everything, right? Like not every, like put it this way, and then I'll end it because I've gone too long. Okay. Tell me, what's going to happen next based on your experience and technical analysis? What kind of pattern is forming here? Anyone want to take a guess? What would you think? See, we have a broken trend, right? A crown or a head and shoulders. Okay. So traders might say something like this, and it might label it. Sometimes it does labeling A, B, C, and the B is based on the shoulder, right? Cool. So that's happening. So should you be ready? A and B. Now here you have an A to B scalp and a B to C swing. So which one are you going to do? Okay. And then of course, what actually happens could be different, right? Where it ends up moving sideways for a while or up. What's the difference? Well, this might be setting up on a 15-minute chart, but the 240-minute chart is still predominantly up. But you have a potential reversal pattern on a 15. Well, once again, you have to decide, is it a scalp or a spot or a swing? You still have to make decisions, but nonetheless, it spotted a potential head and shoulders forming. And so now you should already have your trade plans on whatever you're trading, and you look at it like, oh, that would work good for me, or that would not be favorable for what I'm waiting for, and it's either an opportunity or a threat. Good. Make a decision and react accordingly. Okay. It's like sending out 12 guys on patrol to make sure there's no bad guys going to attack. You have to probe and probe and probe and probe and probe. So TradeRs just happens to probe 7,500 charts at the same time. Cool. So I got to go, man. Look, that was way too long. I apologize, but I will see you, I guess, at Forex today in like 15 minutes, huh? Yeah. Peace on earth. May the pips be with you. May our profits be above average. Have an amazing, wonderful day full of pips and happiness and joy. Nothing but sunshine. Unless you live in a desert, then rain. Cheers. Peace on earth. May the pips be with you. May our profits be above average.